Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. Today is June 8th, 2026. And before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. And my guest is the CEO of Copper Giant, a company advancing high quality copper projects with a focus on the Mocoa copper deposit in southern Colombia. It's Ian Harris. Great to have you back on the show.
So today is a holiday in Colombia where I live, and World Cup's coming up. So I'm trying to support Colombia. I'm a little torn. My parents are both from Scotland. I think it's the first time Scotland has been in the World Cup since 1978. So I might be wearing two jerseys. Hopefully, Colombia and Scotland don't face each other, and I have to make a big decision. So um, don't judge me too much on my shirt today. But I took advantage of the holiday and I say I'm gonna have some country pride.
That's awesome. Well, let's talk about the copper market, and maybe later we'll get into World Cup. Who knows? But I want to talk about the fact that copper has hit all-time highs once again recently. We saw 665 close on May 26th, and then $6.70 on June 2nd. Now we have seen what appears to be a sell everything event on Friday of last week, which I want to get into in a moment. But first, copper was of course subject to a correction, but still at a very healthy $6.40 a pound as of the time of this recording. What are your thoughts on copper hitting new all-time highs, and where do you see it headed from here?
Yeah, I mean, if you look at the 2-year graph of copper, you take the volatility out of it, and you see that the long-term thesis is playing out, right? And some of the big moves recently, I always talk it. That's the fight over the short term vision and a long term vision. The short term vision is definitely risk on, risk off, or treating copper as Dr. Copper, where certain events like Iran, and then there's some concern over what the world global economy is going to happen. But then when it's looking long, it's going, well, it's inevitable that we're going to have a significant supply deficit. Most of the banks either started saying 2026 it was about 50-50 going to be a deficit. And now all the banks are flipping over. All of them are updating their forecasts. So the long-term trend is fully intact. There's the straight reducing sulfuric acid on the back of everybody's brain. All these things are going on at the same time. But you don't build a mine over a weekend. And I hope, I'm reminded many times of what Rick Rule says: don't base your investment strategy based on what happens over the weekend. And really, we saw this big move. We see the trend coming back, get again hitting all-time highs, but we saw a pullback in copper of about 4%, 3.8%. But Cop J and Cop X, moved over 10%. So that's like a 3-to-1. So what does that really mean? It's a huge opportunity for people that are strong believers in the medium term and long term trends of copper, right? I tell my kids, I just had one who just graduated from high school, and is going to go out into the world. I keep telling him, since he's marketing or economics 101 is buy low, sell high. And why do you hear that so often? Is because it's so hard to do. Like you say, it sounds simple, but emotionally it's very difficult. And so little openings like this actually create a huge opportunity, because historically, copper over the many years is cyclical in the way that it trades, right? But this time it's truly structural. You have a structural bull coming into place. There's nothing that's happened recently that is undoing it, right? So you look, and I think I'm going to stop there and put a pin in it. So, because I think you probably have more questions, but it hurts to see days like Friday, but it really creates a huge opportunity.
Yeah, I wanted to ask about that because, as you mentioned, copper down 3.8%. The COP X ETF was down nearly 11% in a single day. This was across the board. We saw sell-offs throughout the commodities complex, throughout pretty much the equities market in general. The Nasdaq was down nearly 5%. I believe the S&P was getting close to 4% down on the day. Um, what do you think caused this? Obviously, that's a $10 million question, but I guess the greater question is, if we do continue to see weakness across the equities market, and perhaps what many are calling a bubble bursting in the big indices, in the big tech stocks, the risk assets, which mining equities are seen as, generally tend to sell off more, at least in the initial phase. And this could potentially create a buying opportunity. What signs would you be watching in that sort of broad market correction that would make you believe, okay, now is really a major buying opportunity? And how do you contrast that with potentially trying to stop yourself from catching a falling knife?
So, that's a really good question. First of all, I'm going to take a step back. And the first question was, what do you think caused the correction, and why did it go to the mining equities? Um, normally the knee-jerk reaction normally isn't the overall thesis. Like I like the Iran analogy, because panic, oil prices go up, economies will suffer, Dr. Copper will be hit, and copper took a big chunk. And then guess what? Now it's still going on, and copper hits an all-time high, because, oh no, the straight is also where we have severe, as the models get more advanced in figuring out how this all plays out. And you just described the exact same thing. So I actually think it was the job markets were doing great, and there's some anticipation that the Feds will raise rates, and anticipation of inflation, blah 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 blah, all that thing. But obviously the U.S. economy humming is pretty good for copper. And the other is, I thought for a while the real start of the bull would have been one of these bubbles popping, and it's pretty simple. I love copper. It's amazing. I'm just pretending I'm somebody. It's amazing. There's no doubt that it's going to go through the roof. Yeah, I believe what Friedland says. You should buy copper bricks to build your house, because you have to need a telescope to see the copper price, blah, 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 blah. But I just made 50% on my NVIDIA stock, right? So I'm waiting. Until I can't make more money there. And then I'm going to rotate into the next thing. So you need a rotation from going from one piece to the other. So I felt that you need a pop, right? When especially AI and tech stocks, which underlyingly, the AI push is one of the reasons why copper is going through the roof, but you need that rotation. But the initial reaction is go to cash and then redeploy. We see that, you said it very well. There is initial risk off, but then it's normally the start of something really great. So, these bounces normally took 1, 2, 3 days, but they seem to be happening in a quicker pace. So, I don't want to give investment advice, but it's going to be a painful day. But it could be the rotation, because the thesis is there, right? All the rest of the thesis is in place, and it's playing out, right? Whether it was gold, or whether it was silver, or whether it's copper, or whether it's any other of these commodities, this anticipation that it would rotate back, it would be the shining star if the bubble collapsed.
Let's switch to discussing the supply side and the constraints being faced there, because Trading Economics is reporting that Chile, the world's #1 copper producer, posted its lowest April copper production in over 2 decades. How big of a signal does this send on supply side challenges in the market, in your view?
So one of the reasons, I've been kind of talking about this for a very long time. And so it's happy, to see, wow, I'm not an idiot. It's actually happening, and it's actually playing out in front of us. But one of those themes was not only, that copper price will go up, but supply side cannot respond. And that really creates a huge opportunity, because it means it's not a flash in the pan. And I tell a lot of people, you can take your time and learn copper, right? It may be uranium or lithium or cobalt or some of these other metals. You really have to, they play out pretty fast sometimes, and you miss the opportunity. But the last bull in copper, we had basically 4 years. Every year went up about 50% every year. I think the total ended up going up 250% over, but it's just a nice crawl, right? It just continues. Yes, there'll be individual spikes over time, but and so it's worth getting to know copper. And one of the things that I knew was that the supply side cannot respond fast. Like, look, we're sitting at all-time record highs. The world's largest producer of copper should be incentivized more than ever to get more copper to come out. And guess what? Year to date, Chile is down 400,000 tons. That's like the second largest copper mine in the world by itself, by the way, to put it in. It's down almost 14% year on year. I think that's like a 2-decade low in the time when you have historical high copper. And why is that? It's because in the past cycles, companies tried to do greenfields projects, budgets went up or it was difficult, and they said, you know what? It's cheaper and lower risk to reinvest in brownfields. What also happened over the last 20 years is grades went down 50% because they just took the same project, made it bigger. It became less economic, but they said, I don't care, right? I'm still making money. And they didn't invest in new projects. There wasn't an investment in new discoveries. And guess what? Now copper is sitting at $6.50. It's up over 60% over the last 2 years. I think 40% on the year. And guess what? You can't produce it. And so most of the models also anticipate very little disruption when we've seen lots of disruption, right? So it's all playing out. It's why the banks are flipping their models into deficit. And the other, last thing. And the other thing is, copper does not have gigantic inventories like other metals, right? So, I remember at one time silver was sitting at 1 billion ounces sitting in the LME or something like that. That's like a year's worth of supply. In copper, we're at record highs, because companies are hoarding, right? They're anticipating the supply demand, but it's still sitting at like 15 days worth of supply, 15 days. So, and because guess what happens when there's not enough copper? You can't build stuff. You can't get lights to turn on in new buildings you're constructing. You can't make electric vehicles. You can't play out these hundreds of $billion AI data center buildouts when we're transitioning not just to a decarbonization of the world's energy, but we're going to a digital age. And guess what? It's a race, right? Whoa, what do you mean? I can build it. I can't build it, but China's going crazy. We're in trouble. So this is all playing out all at the same time. And so fundamentally and structurally, it makes a huge opportunity for investors.
Well, given everything we've discussed on the macro side, talk to us about Copper Giant and how you're incorporating the realities of current copper market dynamics into your decision-making and goal setting.
Well, the hard part is you have to really think really far ahead because I always imagine myself on one of these gigantic ships. Maybe it's got 2,000 trillion containers on it, right? And you've got jet skis driving around you all the time, right? So it's all about trying to steer a very large ship over time. So luckily, Frank Justra, who is the largest shareholder of the company, also shared that vision. It's the reason why before the equity markets responded, he was there and building his position in the company. Is that you ideally, right? You want to be at the ideal price of copper when you go into production, right? If you're too late, then all of a sudden construction start getting canceled. You go too early, the money's not there, and your cost of capital is too high. So, but we see that this window is now opening. So now it's all about moving as quickly as possible towards a construction decision. Now, I know that people hear that a lot, but I'm a mining engineer. I've been working in South America since 1999. I did the exact same thing at Mirador, the closest big copper project to Mocoa. And so we are already thinking ahead of what we need to do today in order that we don't hit a roadblock 2 years from now. So the goal here is we're converting the project to a development project. That one of the reasons is trying to make sure you're navigating what we see that's going to happen in the copper space. The other big one is the project has been extremely undervalued. We've done well over the last year, but a PEA, which is a preliminary economic assessment, is the first time you wrap economics around it. And I think that's when a lot of the benefits of the project start to shine. I could go through the list, but multiple things that's when you have a near surface project start coming out. And so you establish an NPV, and an NPV is a NAV. And so then it really clearly establishes this is the valuation. All I have to do is apply a PNAV. And so we know whatever PNAV gets applied, it will be way better than our current valuation. That we currently at multiples. So it's also a part of the strategy because you could either grow the deposit, which is incremental, or you could get multipliers. So we see it as being a multiplier event. And our plan is to get that PEA done by the end of the year.
Well, talk to us a little bit more because you've launched this PEA for Mocoa last month. Walk us through those details and ultimately what you're hoping to discover through this PEA and how you plan to use the information to advance the project.
Great question. So we hit a huge catalyst last year, November. So at the end of the year, we put out an updated resource. So we spent a little over a year drilling, and we increased the resource by 60%, but we passed 1 billion tons. And that's a really important number because normally you just don't design copper projects bigger than 1 billion tons over the first 20 years. I mean, that's just a reality. It's really, really big. So if you go to 2 billion, then it's 40 years. If you go to 3 billion, it's 60 years. I'm exaggerating, but those are pretty good rules of thumb. So we already knew that we had that project at the max size, which makes it attractive to majors. It makes it attractive that they don't want to waste their time doing stuff that's smaller than that either. So that was a huge catalyst, but it also says we have enough material to start building a project around, even if the deposit continues to grow. So we also very lucky to have directors that have also done it before. One, Mark Gibson, was CEO of Cordoba Minerals. It's a smaller copper project, but more advanced in Colombia, and they just got their environmental license for an open pit copper mine in Colombia, which I wish market would, it should take away a lot of the naysayers. But he's just gone through this. So not only thinking about the engineering steps, but also the permitting and environmental steps. So we were able to put together a great team, not just to do a PEA, but forward thinking to licensing, PFS and FS, et cetera. So we're working with SLR and Intera, which is a Colombian group that's done a lot of these permits from the beginning. But what are we going to learn? Why are we doing this, right? Well, we know we have a high grade core, about 20% of the deposit. We at a 0.75 cutoff is 94%, 0.94% copper equivalent. We know we have a big high grade zone right near to surface that would be great as a starter pit. We've already got the infrastructure. We got the power lines. We've got the roads. There's ports in country. It's lower elevation. We're not going to be putting in desalination plants. The town of Mocoa is 10 kilometers away. But nobody lives we're not going to have to move anybody in order to put a project together. All these things come out in the economic side. And so that's what we're going to discover is the economics of the project, the attractiveness economically, but we'll also go through, what's called a feasibility study on purpose, because you're going through, is it feasible to be able to construct a project? What are the major barriers that we have to be looking at now? We've obviously anticipated a lot of them, such as permitting or environmental or all these things that are important when you're starting to look at a construction decision, but it will help paint a better picture and develop the first conceptual vision of what this project would look like as a mine.
On May 20th, you also announced that you've expanded the Mocoa resource footprint with 3 drill rigs turning there. How did you accomplish this, and how does this resource expansion tie into the overall development of the project?
So we had some major goals that we wanted to do. We actually were very focused on what we wanted to do with this drill program. And one of the things that happened was Edwin, our vice president of exploration, goes, Ian, I need more meters, right? You're asking too much. So we brought in directional drilling in order to be faster at the ability to do that. And one of the big ones was we need to start converting. You don't need it for a PEA. You can do inferred resource for a PEA, but right after the PEA comes a PFS where you cannot. You're going to get reserves, and reserves can only come off of measured and indicated resources. So we needed to move at least half, and not half, but 500 million tons at least, as was kind of our goal, to get it into measured and indicated by the time the PEA come out. And that's where the advantage of being able to do these daughter holes off a single hole to get that density in drilling. But we also said, look, there's all these holes within the pit that's never been drilled before. And that's what you're referring to. So it's confirmed the model. We've been confirming the model. It's been looking great. But some of these holes within the model, it's basically the computer program said you would already mine it anyways. You would just have been sending it to a waste dump. Now it's converted to ore. So that is extremely exciting to us because it's kind of like a freebie. It lowers the strip ratio and also looks good for the future economics. And the last thing that we're doing is we're still testing some additional targets that are near the overall deposit. Maybe some of them don't ever get into a resource estimate, but it tells majors that this is a generational project, that don't worry, after 20 years, you're going to have 40 years. After 40 years, you're going to have more. So it's like icing. It's the cherry on top of the deposit that says that this is a great project and it's going to be a generational project.
We talked last time about the presidential election in Colombia, and now with the first round of polling complete, we have the so-called far right. This word gets thrown around a lot, but in this case, the media is calling him far right candidate Abelardo Abelardo de la Espriella. I hope I'm pronouncing that right. Beat left-wing candidate Ivan Chipada. I might be butchering both of their names. Maybe you can let me know. But the final ballot will be June 21st. And I don't want to ask you who you think will win or who you prefer to win, because, of course, as a company operating in Colombia, you need to be politically neutral, regardless of which administration ends up in power. But what I do want to ask is, regardless of who ends up winning the election, what kind of policy initiatives and support for projects like Mocoa would you like to see come out of the new administration? Or is everything great as is?
Being a part of some of the bigger builds, you incorporate these thoughts from the very beginning, right? This is not something we wait. And one of the conditions I wanted was we need to make a project that it doesn't matter who is president, that it's going to contain and maintain political will to move it forward, right? This project is big enough that forget it. You're not going under the radar, right? It's not happening, right? This project will move the GDP of Colombia. It will be very important for the country. So you want to make sure your bases are taken care of, that you're working very close with the community, that they feel that it's a part of their potential future. You have a good national reputation, and that's what drives political will. So we've been doing that. And so under Petro, and market has been very negative overall on Colombia, but things are getting done, right? We've been able to do really big things like redefining forestry reserves and resetting our titles and building bridges and doing all these things. We've been drilling now for 18 months straight without a single hiccup. You see Cordoba getting a permit for an open pit copper mine, the last step to board construction. So on the ground, and that's because Petro said, I don't like oil and coal. I want to focus on the transition metals, and copper right on the top of the list. It's a part of the development plans of the country. So the election, pretty good. Cepeda is the incumbent Petro's candidate and the incumbent party. And then in that first round of elections, it had many different candidates, is reduced to two. The other, which is being called far right, and to make it easier for yourself, his nickname is El Tigre, the tiger. So that's a whole lot easier to say. So I think we've developed a project to be good no matter which way it turns. Cepeda says he'll continue the policies of Petro, and we will just continue to demonstrate to market that, we're continuing to demonstrate that things are getting done. But if it shifts to the right, and Polymarket right now is plus 80%, is saying that it's going to be El Tigre, his policy is, I want to incentivize large-scale strategic projects in metals in the country, right? And that list is very, very short. So that would also, I think, would probably be more important for the market reaction than it is actually the things getting done on the ground, because we are continuing to move forward, and we've been very successful in moving the project on the ground. And the country itself has been doing the same, and the Alacran getting its permit is a wonderful example of that policy actually happening on the ground.
Well, I'll end as always by opening the floor to you. Is there anything on your mind when it comes to Copper Giant and the copper market that you think investors should be paying attention to?
Don't miss these rotations, right? Is probably one of the biggest ones. The medium-term fundamentals, the long-term fundamentals of copper are structural. They're there. They're happening in front of us. So you kind of know how this story will play out. So these short-term volatilities really create some of these opportunities. Copper is definitely worth spending more time getting up to speed, understanding the market. And watching what others do. Like I like Frank. Frank goes, don't buy what governments tell you to buy. Buy what governments buy. And governments right now are buying copper, right? And companies are buying copper, right? BHP selling their silver stream so they can focus their energy on the copper. You have Fortescue and buying a massive copper asset. You see Hud Bay moving. And the truth is, In this case, it's not that hard. There's not very many billion-ton near-surface projects even on market, right? And taking both Alta and Arizona Sonora off the market makes that list even shorter, right? So it's worth the time. It's going to be one of those generational type bulls that we see that creates huge opportunities. It's worth spending the time definitely getting to know the market. And I hope we have a good understanding of it, and we're trying to make sure that we're creating as much value as possible for our shareholders with a very structured plan that we're executing on.
Great. Well, I'm going to put links in the description below to the Copper Giant website as well as social media so people can follow along with the company. Ian, as always, it's been a blast. Thank you for coming on the show.
Always fun.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.